Hey, what's going on, guys? Welcome to TrendCloud Trading. We're going to go over the market today. Futures, Forex, stocks, whatever you guys want, just pop it into the chat and I will bring it up on the screen. We did have that trade on the euro, and something very interesting happened here. We were trying to take this trade short and catch this move here on the 4-hour chart, this downward move. This is just extremely extended. And when you put your trend cloud on all three time frames, you'll see everything line up. It's color coordinated that way, just to show you trend across multiple time frames. And this way you can apply your strategy better. And what happened here in this particular case, we're going to go through it right now. It was very interesting to see how price reacted, right? We did set up the trade. The trade did fail, but it was just a scrape on the knee, right? It was less than 1% of our total current account value. I think it was like $100-something or whatever. So it was under $200, right? Because we always maintain a $20,000 account, right? So in this room, for the sake of argument, so it was actually a little under 1%, and the trade failed, right? So it's just a scrape on the knee. We didn't, destroy months of profits by over leveraging ourselves. And let's just go over it real quick, step by step. And I'm going to eat some chicken here for breakfast. Okay, so hey, we can do whatever we want, right? Because we're in charge of the trading desk, right? That is the beauty of trading for a living. You can do stuff like this. Pitch, what's going on, brother? I did. I did have a great Thanksgiving. I'm still eating some of the Thanksgiving dinner right here. So what do we have here? Extended trend on the 4-hour chart. We want to assume that price is going to cross below the 50 simple so that it can recalculate. Kind of like how it did here, right? See this? Price goes down 5 waves, candles turn ice blue, reverse, recalculate, and it just went sideways, broke out to the upside. 1, 2, 3, 4, 5, 6, 7. This thing is extremely extended. 8. It's trying to make a 9th wave and it's failing. So right in here, this is your market edge as of right now. It's starting to retest that area and pull back to recalculate somewhere down here. So we're trying to catch this downward move here below the 50 simple. That's what we're trying to catch. Okay, so, and we know it has to do that. So when do we take that trade? Well, what did we do? First of all, where was the original setup? The original setup was right here. You can see we're below negative 200. We pulled back into this was the original supply zone, and it went through it. Okay, so I think if we go out to the ideas, let's take a look. My ideas right here. Here's the trade, right? This is what it looked like. This is what the setup looked like originally. And take a look and see what happened from there. Okay, so from there, it pulled up, it did go through, then it found support. Okay, so this zone turned into support. So it did rip through that zone, pulled back, and we're sideways, right? We're in this sideways movement here. Here's what it looks like on the lower chart. So, so that trade failed. No big deal. And what do we do with this now? Well, we have to wait for momentum to simply break back below negative 100. It's going to do something like this. Maybe we break through some structure here. Then we can start looking for the pullback into some kind of zone, right, for the move down. Okay, so that is always what we're looking for. That is always what we're looking for right there. And that is what the TrendCloud system helps you accomplish. All right. Let's go over to gold. Gold has opened up. Put our opening range breakout tool on there. And what do we have here? Well, uptrend on the high time frame, uptrend on the middle time frame, uptrend on the low time frame. All three time frames are in alignment with trend. Very good. TrendCloud makes it very easy to see. We're also cycling up, and momentum is up on the high time frame. Good. Momentum is also up on the middle time frame. You can even add your cycle indicator to the middle time frame if you want, and we're right at the top. Okay, we're right at the top of that cycle. So we were expecting this breakout to the upside. So what do we want to do here? Well, we want to start looking for levels of imbalance, like right here. Let's open this up. Look at all this support that we have inside of this zone here. We've also got all of this, right? All this in here, this consolidated area here. Whoops. All right, so lot of support down here. This would be our retest area. So we're going to wait for something like this. Let's go ahead and set that up right now. Excellent. There's your $100 move right there. So we have that set up. Why don't we also, let's see, from here to here, let's put Fibonacci lines on here. And we can see we have that 886 retracement level and the 786 right in line with our previous week's high. So we got the previous week's high, the 786 and 886 retracement level hovering around it, sort of sandwich in the middle there. So let's do this so that we could see that very clearly. Grab another little box, and from here to here, make that darker. I love using color like this. There's your ratio confluence. We were talking about that a couple of days ago, right, Hitch? Ratio confluence. There's your ratio confluence right there. 786, 886, previous week's high, all inside of a demand zone, drop, base, rally. That's some pretty powerful stuff right there. Let's also take a look at momentum. So when this pulls back into this area with all this support, um, we've got a lot of information here saying, hey, this could hold. Why? Well, trend is up on the middle time frame. Momentum is up on the middle time frame. Trend is up on the high time frame. Momentum is up on the high time frame. And we're also cycling up. So we've got a lot of information to the upside here. Don't hesitate. Don't even hesitate. Now, if you're placing this trade and you're saying to yourself, I don't want to lose $108. Well, I don't know what to tell you. You may have to. This is way, this is only like a little more than 0.5% of our total current account value, right? So, but maybe mentally, you might be saying to yourself, gosh, I cannot risk $100, $108. Like I can't, I just can't do it. So what's going to happen? You're not going to take the trade. It's going to work and you're going to feel terrible, right? So what do you have to do in that situation? Well, you simply have to find a number that you're comfortable with. Maybe you're really only at $54. Like, I am comfortable taking that $54 risk. Okay. Well, then you want to try and stick to that throughout your trading process. Okay? You want to stick to that throughout your trading process. So, just because it makes sense that you're taking a trade at less than 1%, right? That's our rule, right? We want to keep it less than 1% of your total current account value, or right at 1%, right? But maybe you're mentally not there. $200 is 1% of 20,000. You might not mentally be at $200. Maybe you're more at $54. Maybe you're at $100. I don't know. You have to ask yourself that. So wherever you're mentally at, that's really the most important risk number. The rule of 1% is very important, but the mental rule is more important. What are you comfortable? Because if you're not comfortable with a $200 risk, even if you have a $100,000 account, maybe you have like a $45,000 account, right? So that's $450, but you're really not used to risking $450. You might still be at like $54 or $100 or $80 or something like that. So you've got to understand that. You got to have that conversation with yourself and make that your rule. Here we go, pulling back into that zone. Let's see if we get it. Let's go over to silver. There you go on silver. I told you. I told you so. Look where we're at. We called that one, didn't we? We knew that we were in some kind of sideways movement. We broke out to the upside. We just broke through a little bit of structure here. Did we? Right? We broke through all that structure there. So, we're high on the curve. We've got we've got a lot of momentum with us. Broke out to the upside, but we're running smack dab into this high time frame curve zone. So what are we going to do? Well, you can either go with momentum and trend and buy right into that sucker in the hopes that it's going to go past it, or you wait. What can we wait for? Well, we can wait for all of this to be broken, even just by a little bit, and then start looking for for demand zones, like right here on that 15-minute chart, right? What do we have here? Rally base, almost like a rally base rally right in here, right? We can wait for that, right? And it's right at the top of the opening range breakout, but that hasn't occurred yet. That hasn't happened yet. That's just a plan. We can plan that, but as of right now, trend and momentum are to the upside, and we've got this thing in our way. Well, are we going to short this? Well, you can't short it. Oh, but it's on the high. It's on the highest time frame. Shouldn't we be shorting that? No. You want alignment, right? You want everything lined up. If you're confused about where the alignment is on your TrendCloud system, okay? If you're confused about where alignment is across all of your time frames on the TrendCloud system, all you do is grab a vertical axis line and drop it on top of one of those green arrows. Now read your chart. Let's see here. Green arrow going up. Candles are green. TrendCloud is green. Good. Green arrow going up on the middle time frame. Good. Momentum is up also above positive 200. Good. Cycling up on the highest time frame. Momentum is up. That's good. Green arrows, green candles, TrendCloud is green. We're in alignment. We're in alignment. Take the trade, right? So the only thing is that this is right here. There's no asymmetrical leverage to this, is there? There's no asymmetrical leverage to this. The trend is your friend until the end. That's right. It's all about context, right, guys? It's all about context. And guess what? You don't have to take the trade. Just because everything is lined up, you can sit back, sort of go like this, light a cigar, and say, do I want this? You got to put yourself in that power. Platinum. All right. Grab that vertical axis. I don't see any signals yet. Here, drop a vertical axis on this green arrow right here that took place at 3 o'clock in the morning here. Okay. Green arrow, candles are green. This is sort of up. Where's momentum? Momentum is down, right? Crossed through here, pulled back into the blue shaded area, never crossed back above. So that's an opposite signal. Trend is down. That's an opposite signal. High time frame trend is up. That's in alignment with this, but not this. And momentum is down at that moment in time. Does that sound like something you want to be a part of? No. All right? That's how you do it. That's the power of your charts. We're starting to break above structure here on that low time frame, aren't we? We're starting to break above this. Little piece of structure right there, right? Breaking out to the upside. This is pulling back into the middle time frame trend cloud on low momentum. So it could very well pull back down and retest this area. But what do we want to do? Where do we start the process of context? We start the process of understanding the context of the trade on our highest time frame. We want to be a part of this. We want to be a part of this thing. That's what we want to be a part of, the high time frame trend. Because it's still early, isn't it? 1, 2, 3, pull back 4. We have one more wave to go. It pulled back kind of deep, but the trend is not extended. Therefore, the context of this thing, we have to just assume is still up. Maybe it's too late for you mentally. Oh, we're at the fourth wave. We're at the fourth wave. I really only like taking trades in the context of the second wave. So I like to look for stocks and forex and crypto and futures. I like to look for instruments that have just crossed on the high time frame. This way, I can catch everything on that first wave up or that pullback. See right here? Look for signals on your high time frame on that second wave. Here's a signal right here. Did this work out? Yeah, it did. Right? Here's your entry somewhere around here. Here's your stop loss. That's the high time frame. But you can look at that on the lower time frame and try to get an idea of where to get in on this. This is a better opportunity. I wonder if there is a trend delay. As the other day, platinum. So interesting. That's a great question, Hitch. And the answer is yes. There is always a trend delay. Okay. So you just picked up on something. That's very astute of you. You picked up on something and you said to yourself, I wonder if there's a delay with trend. The answer to the question is that there is a delay among every single indicator on this chart. Every single indicator on this chart, there is a delay. Why is that? Well, because indicators are mathematical equations. Okay, they're just mathematical equations. Okay, and there's a delay to that. Now, here's the thing, Hitch. You want there to be a delay in this. Okay, you want there to be a delay in any type of moving average. Why is that? Well, because as price pulls back, sometimes it pulls back rather abruptly, and you get a break of structure, like we did here, right? We pulled back, tried to make a move, and then we broke through structure right here. So some people, if they're just looking at this, they will read this as a termination of the uptrend. Okay. And that is strictly if you're just looking at this. You're just looking at price action. Nothing wrong with that, right? What I do and what I learned from my mentor was to use a system like this, okay, where you're saying the trend, the majority of the information, the general direction of this thing is still to the upside. The general direction of all the information on this chart is still to the upside. If you're just reading price action, you would read this as a termination of the uptrend. And we've all seen this happen, right? We've all seen something like this, right? A continuation up, break above structure. That's why we use TrendCloud, because we know that the general direction of this is up, and we don't just go off of a simple break of structure there. Okay. We use it as a component, right? Price action is a component of trend, but it is not an end all be all solution. So in that respect, Hitch, we want the moving averages to be lagging, or a delay, as you say, because if it didn't, it would be too abrupt, and we would say, "Up, the trend is over. Um, Start going short," or whatever. That, I mean, it would simplify things a lot, wouldn't it? But it in the movement of price, it just works better when you use a system like this, because you're taking into account these deep pullbacks, a little bit of sideways movement, but by all means, I do know people who just simply use price action, and they feel that there is no delay in that. Just like, so price action is a component of trend, and levels of imbalance like supply and demand zones will outperform, or I should say, they will outpace any indicator, right? Because when you're pulling up, like when we're pulling up into this supply zone, right? Let's say we're pulling up into this supply zone, and there are enough sellers in here to push this thing down. When we get up into here, you can be 100% sure that the cycle will be up, momentum will be up on the high time frame, momentum will probably be up here, but we could pull into this and it could do this. So the supply zone is a level of imbalance, and levels of imbalance will outperform anything that's on your chart that is a mathematical equation. So any indicator on your chart, the supply and demand zone, it will outpace it. Okay, it will outpace it. Does that make sense, Hitch? But it's up today 5%. Yep, yep. You'll never know. You'll never know what the deal is. Yeah, you'll never know what the deal is, even if it's up 5% or whatever. That's why, if you try to establish and understand every single variable that takes place, you'll drive yourself crazy, right? And Peter Brandt, another guy that I studied with, he always says, don't develop a trade plan trying to outperform every variable that could possibly take place in the market. It's not there. And Musashi says this also in the Book of Five Rings, right? He says it's impossible to be invincible in a battle. So don't think that you're going to train that way. It's impossible to be invincible. You can do your best. You can practice more than the next guy. Just Michael Jordan says that all the time. He's like, "Why?" People ask me all the time, "How'd I get so good?" Well, it's because I outperformed everybody, right? Or I practiced more than everybody, right? I did things that other people weren't willing to do. You got to be a very special type of person and have a real love for what you do. And that's why we're here, right? You guys are so dedicated to learning about the process of trading. Your ears are open. You're studying stuff. That's great. That's great. And you'll be like that forever. This'll never go away. So studying something efficiently is what I really enjoyed, and that's why I built TrendCloud, because I wanted to really be able to study the charts in a very objective and efficient way, and using trend and color coordinating trend and momentum on the chart just boosted me up to where I wanted to be. I wanted to be a top tiered trader. I wanted to trade for a living. I wanted to trade professionally. And when you go through all of that heartache and that gut wrenching, like rip the trade plan apart and write it over again, and very frustrating. But when you start to put stuff together and you stick to it as an objective way of looking at the market, that's when you start to really succeed. And you know, I hope you use TrendCloud to do that, because I already went through all of that trouble. So I'm really, my intention is to give this to people and really catapult them into, the next level, because I already did the work. And that's why we buy from coaches, right? That's the reason why we buy courses, and we um, yeah, read books and study with people, is because we want to get to that. We want to get to that position as well. We want to get to that level. We want to have that transformation as well. And so, if you can use some tools that a mentor of yours built to get you there, that's where the value comes in, right? That's where the value comes in. Yeah, yeah, absolutely. We'll have to. Yep. Market over muted day today. Yeah, I think. Let's take a look here. Do. Okay, yeah, the agricultures actually opened up late. They just opened up corn and wheat and everything. Let's take a look at the agricultures. We'll probably just go. We'll probably just go till like 10 o'clock today, guys. Or if you have questions, I'll stay later. Wow, corn is just super sideways, right? That is just sideways there. Um, where's the market? Where's the market edge? Let's line up the market edge here. Right, here's the swing low, and did it break through? And there's the swing high, right? Swing high, swing low, right? Because it broke through this structure. Then it pulled up, didn't make another swing low, broke to the upside right here. Okay. And then went sideways. In order for us to take this and bring it up in here somewhere, what has to happen? We have to see this, right? When we have this situation, then we can bring this here. Okay. And then it'll pull back into some support level, right? And at that point, we'll go here. And then if it does this, we can bring this here. Okay, that's how we follow price action. Right, now we bring this here, pulls back, maybe it pulls back deep, and doesn't make it. It makes like a double top, right? Makes like a double top, forms maybe a higher low, and then breaks up. Nice. All right, now we can bring this to there. Pulls back, and then this would go here. And again, pulls back. Maybe this pulls back really deep and just breaks below this level. Now you can say, through price action, you can say, okay, this uptrend is terminated according to price action. And then what would we do? Well, we would bring this slightly down to there, and we would wait for the pullback, and maybe it goes sideways and then pulls down. Now we can pull this to here, to the lowest point. and pull this to here. And now we're making our way back down, right? This is a great exercise to do. Right? Great exercise to do. Go to here, pull this here, and you just keep doing that. I used to do this. I used to do this in my cubicle when I was working for someone else. When I was working for somebody else, I would do stuff like this. Weird stuff, right? Who does stuff like this? What would this be, right? Sideways movement, range bound, breakthrough, pull this down, and this would go right there. Okay? So just watch that again. Trading view very slow. Update charts on my side, 10 seconds. Oh, wow. Oh, really? Oh, that's interesting. Let's see. Yeah, look at that. There is. There's some lag there. Hit that F5 button. Oh, I forgot to bring up YouTube. Let's see if there's anybody on YouTube here. Let's see. Hello, everyone. All right. There we go. So let's see. The Swiss, right? The Swiss franc. What's going on with Mr. Swiss franc here? Let's take a look. Let's refresh our charts. Okay. Refresh. Uptrend on the high time frame. Got some signals here. Cycling up. Momentum is up. Sideways, right? Sideways on the middle time frame. But momentum is with us. And we have an uptrend on the middle time frame, right? So let's take our vertical axis, put it right on the very last green arrow, and let's read this. Trend cloud is green, candles are green. Green up signal, good. Middle chart, momentum is up, good. That's in alignment. We've got the crossover, candles are green, good. That's in alignment. Cycling up, momentum is up, and trend is up, all on the high time frame. Green. Okay. Everything's in alignment. We did that really quick, didn't we? So I would say that the only thing here that's bothering me, right, is the fact that we're in this this bizarre range here. Let's open this up. Yeah, we're in this weird range, right? Let's follow price action here. Let's just take it from here and here. Range bound, breaks above. Put that there. We can't bring this up until it breaks above again, right? So we broke above. We can bring that there. Now we're range bound, and we're sort of breaking to the upside a little, pulls back, breaks to the downside, retest, breaks to the downside again, right? So we're just sort of in the middle here. So when we do get a breakout, here, we should have something pretty powerful. Or you can start taking signals. Now this would have been, let's get rid of everything. Let's just get rid of this. This would have been great. This would have been a great signal if that damn candle wasn't so friggin' long, right? Because look at your entry. Your entry would be right there, and your stop loss would be all the way down here. We hate that, right? We like short little candles like this, or let's see, let's find a short, or like this. See this? That is way better. That's a way better signal candle, right? Let's find another long one right here. Would you take this? This is that's a pretty long candle, right? That's a pretty long candle. And when you're in a sideways movement, these signals here become pretty dangerous, they become pretty dangerous. So I would not take this trade. Sideways movement, really long candle, meh, there's better options. Remember, you're in control. You are in control. Let's go back over to the euro and see how the euro trade is panning out. Okay, so here we go. We're breaking through. We're breaking through some structure here, right? We are starting to break through structure and we're starting to make a move. Let's erase everything. And let's go through our process. Grab a vertical axis line and let's go right here. TrendCloud is green, candles are green. Momentum is up, middle time frame. Trend is up, middle time frame. Trend is up, high time frame. Cycling up, momentum is up. Yeah, excellent. Entry right here. Stop loss right there. And, we're on our way. We're making some money here. But what don't we like? We don't like the fact that this is extended and that really cuts in on our asymmetrical leverage, doesn't it? This is the same thing as if you were running into a resistance area, which we are right here. So from our entry to that area of imbalance, right here, drop, base, drop. This is a high time frame drop, base, drop right here. That's a level of imbalance. So from here, our entry point to right here, the first part of that level of imbalance, that's not even a 1 to, I don't even think that's not even 2 to 1. That's not even 2 to 1. Yeah, sometimes your best winning trade is not a trade. Exactly. Mark Douglas says that all the time, doesn't he? An ill-conceived trade could make money, and a well-conceived trade could lose money, right? So what does that tell you? What does that tell you? That tells you a couple of things. The market can do anything it wants at any moment. That's number one. And number two is this number right here, the risk amount, is more important than this amount, right? So let's say we've got a $200 risk. 1 to 1 would be right here. You want to take trades that are 1 to 1, or you want to take trades with the potential to go 5, 6, 7, 8 to 1 at the beginning of a trend, not at the end of a trend. Remember, so we'd be buying this thing at the end of the trend, right, Hitch? We'd be buying this thing at the end. Where do we want this situation? We want this situation right when we cross to the upside here. We want the pullback into the cloud. We want to get in on this somewhere in here, right? In fact, look what it did. It came back and retested. It retested this whole area here and then took off, right? Grab that vertical axis, place it right there. Let's get rid of that one. Go over to time and let's line everything up. Line everything up. Okay, so here we are, top of the cycle. We're just starting to cross above. We got a high time frame signal. So where is that lining up? Where is that lining up at this point in time? Now we're starting to get our signals, right? early in the trend, right in here, right? We've got one more. We're in the fourth wave here, so we're still early. And we've got this tiny little candle here, right? Tiny little candle. Trend is green, candles are green. Trend is green, candles are green. Momentum is up. Cycling up, momentum up. Great. Right there. Pulls back a little deeper, right? Does it break past structure here? Always look left. Tiny, tiny, tiny little candle. We could definitely afford that. Let's see, did we get stopped out? Nope. Right there. Here's your entry. Right there. Here's your stop loss. And the reason, the reason why it's right there. It's right next to the structure, right? If you did this, if you did that, well, then you got stopped out, and that's okay. That's a real tiny little risk. And then you got another one right here. You got another signal here. But this never triggered. Do you see? Let me open this up. Do you see how that never triggered? Here's your entry, right? So your entry candle. Here's your entry candle with the signal. Right there is your entry. And if you put a stop, even if you put the stop right here, or let's say you just used that candle, never triggered until here, right? Right here is where it triggered. So you got in here, it pulled back. There's your see that right there. Here's where you got in, made a little money, deep pullback, never stopped you out because you're using this right here. In fact, you would use the new structure right here. That's what I would have done. How much did that cost? Is that affordable? Buy one, stop loss? Yeah, totally. $125. $125. Can we afford two? Nope. But we can afford one right there. Big win. Big win. Right? You definitely hit your 2 to 1. I mean, look, this went all the way up to here, pulled back, stopped everybody out, and then kept going, right? But you definitely hit your target. You definitely hit your 2 to 1 target, that's for sure. This thing went all the way up. Beautiful. Okay. Recalculate. Let's try to find some more. Yeah, I do. I've got, here's the viewer count right here. Here's the viewer count right here. We're still going. We're still going. So, no, we've got some other people, and we're just chatting, man. It's all good. We're just chatting about technical analysis because we're crazy, and that's what we do. That's what we do. A bunch of crazies talking about technical analysis. Let's go over to the equities. What's going on? Interesting stuff with the equities, right? Let's clear these charts here. Wow, look at that. So we've got an extended trend on that 4-hour chart. And here's your sideways movement, right? So I love how everything is color coordinated. It like rip to the upside, rip to the downside, sideways. That kind of makes sense, right? It kind of makes sense. Being that it's the day after Thanksgiving and everything is kind of sideways. So, great day to just have discussions like this. Let's see here. What do we got as far as signals go? Well, this is all sideways. How about the YM here? Here we go. Okay, this makes more sense. This makes more sense. Let's go. Let's open up the opening range. Here's the opening range. We have a signal forming there as well. See that? I'm glad you guys get to see what a signal looks like as it's being formed. See that? It's flashing on and off right there. That's because the candle hasn't closed yet, and that is what it's going to look like in real time. So that's awesome. You guys get to see what that signal looks like in real time. Let's go back a little bit and let's see. Would we take this signal, grab that vertical axis? I mean, you can see obviously it didn't work, but why? Why didn't this signal work? Well, let's see. We're sort of in a sideways movement, right? Crossover to the downside, crossover to the upside. We've got a signal to go down, but yet the 50 is green, candles are red. That's a mixed signal. Let's take a look. Momentum is up on the middle time frame. Trend is up on the middle time frame. Well, that's different, right? That's a mixed signal from here. And how about here? Cycling down. Okay, that's in alignment with this. Momentum looks like momentum is like flashing. It's up though. It's green. So that's different. And this is different. So we got mixed signals on all three time frames, right? No, we don't want that. That's no good. Christmas rally. Markets do run out of steam eventually. Yeah. Well, the Christmas rally. Let's think about this. People are going to be buying. People are going to be buying stuff. So I don't know. Maybe that affects the Dow more, right? But then again, Amazon. People are going to be buying on Amazon. That could affect the Nasdaq. We are in an upward trend, right? Here's the Dow, and we're in an upward trend. And the Christmas rally, whatever mass psychology that is, it's just going to be a catalyst to whatever we find. Let's say let's say that the Dow pulls back, forms an opening range, and starts to break out to the upside. That's in alignment with the Christmas rally, right? That could be a catalyst and blast this thing up even higher into an extended trend, in which case you'll probably get a deeper pullback. There's no way of telling. All I can say is whatever you hear about, like, hey, what about the Christmas rally? Hey, what about this news report? Hey, the CEO of this company stepped down. It causes turmoil. It causes panic. It causes greed, fear. The charts are going to tell you. The charts are going to tell you. You can be ahead of that. Always think ahead of the news event, right? Always think ahead of the news event. If you've got TrendCloud on all three time frames and you've been studying the Dow and you're like, I wonder what's going to happen during Christmas. Are we going to have a Christmas rally? Are we going to have this Christmas rush? What's TrendCloud telling you? This is your price action mapping system. Will the news event be a catalyst in the same direction as your TrendCloud analysis? Will it be in the same direction? So that means let's say you've got trend to the upside, momentum to the upside on all three time frames, and TrendCloud is lined up with trend and momentum, and you're cycling up too, right? Everything's pointing up, right? And then you hear a rumor about the Christmas rally. Well, that's in alignment with your with your trade plan. So maybe you take a chance on it, right? You can take a chance on that. But if you got a bunch of mixed signals, then I wouldn't rely on the Christmas rally. You know what I'm saying? It wouldn't really do anything. If you make it a pop, and a pop and a fizzle or whatever. But when you've got, just stick to your plan, right? Just stick to the plan. If you've got TrendCloud and you're following the trade plan, and everything lines up. You grab that vertical axis line and you're like, okay, let's see here. All right, we got a signal here. We got a signal to the upside here. Okay, is that in alignment? Yeah, trend is up, momentum is up. Yeah, cycling up, momentum up down here, uptrend. Okay, okay, okay. Let's start looking for some demand zones. Let's start looking for some demand zones, like here, right? What in this respect, if we're looking at this, let's just clear the chart here. Let's say we go back in time and we're looking at this thing right here. This would be considered a bear trap, wouldn't it? Just the same way that we look at the opening range breakout. If we're in an uptrend on all three time frames with momentum on all three time frames, but yet we see a breakout to the downside on that opening range, you got to say to yourself, that doesn't make sense. Oh, this must be a bear trap, right? Look left, structure leaves clues. Let's open this up. Where did this sucker pull back to? Ah, look at that. It pulled back. Look at this here. We've got a rally base rally right here. And this level is actually the level that's holding, right? Pulled back. So this level isn't fresh, but by golly, it pulled back into it, didn't it? So this signal right here was, right, this is where we would have gotten in. Just one tick above your signal candle. Let me blow this up. Make it really big. One tick above your signal candle, that's where you would get in, right? Well, it doesn't trigger. In fact, it pulls back into this bear trap. And do you see how this level of imbalance outpaced it outperformed and outpaced the other indicators? Because they're just mathematical equations. The buyers were all in here, and this should be green. I'm sorry. The buyers were all in here. This level of imbalance, right? This rally base rally here pulls back, boom, right there, outpaced everything. We didn't get a signal from TrendCloud in here. You never will, because TrendCloud is based off of mathematical equations. You got them here. Here's the big move that happened. Here's the signal. Now the signal caught up. You see all that lag? This will always outperform any kind of indicator. Okay. So, but the thing is, we need a system like TrendCloud to read the price action so that we can say, okay, this is a bear trap here. Where is it? Oh, look at this rally base rally. Okay, it's going to guide your eye and give you the process to take these supply and demand zones that are so awesome and outperform in any indicator on the market. Makes sense, right? So TrendCloud is all about the process of price action, the process of mapping out price action. That is what it's all about. And it's on sale right now. Promotional price after Black Friday, everything goes back up, guys. The $25, right? I'm TrendCloud. If you just want the indicator, it's only $25. That goes back up to $97. And then the entire system is $697. You get the master class, all of the videos, and that goes back up to $1,500. Right now, $697 for everything. I love promoting TrendCloud on, major holidays like that. Okay, so that is the deal. Oh, crude oil. Let's take a look at crude oil and see what's going on. Wow, look at this. All right, let's get rid of all this. Let's get rid of all this, and let's take a look at crude oil here. Crude oil, high time frame chart. Let's follow some price action. Swing low, swing high, breaks below. What do? Pull this down to here, right? And, wait, let's see. Swing low and swing high, right? So here, this is where we're at, right? Here, breaks below, pulls back, breaks below that, right? So now we can do here and here. Makes sense, right? So at this point, we're in a range. Okay, does everybody see how I did that? Everyone see that? Let's do it one more time. Here's the swing high, and here's the swing low, right? Broke through structure right here. There's your range. It pulls back to here, doesn't make it, pulls back deeper to here, and then follows through. So we would bring our line down because it broke through finally, and then we bring this to right there. So now we're in a range. So all of this happening in here on the 4-hour chart, this is all range-bound stuff. Where are we at? Sideways market on that 4-hour. Really can't do anything with that. We really can't do anything with when you're on the high time frame and you're using a trend following technique like TrendCloud. Sideways market signals aren't going to really be as effective in a sideways market. Okay, this is a trend following system. So if you're in a sideways market, you pretty much have to do stuff like this. You've got to take the top, the extreme high, and the extreme low, and you got to look at it like this. And that's the only way you can really look at it. So that is what we're looking at. Now look how far away both of those things are on the lower time frame, right? It's pretty crazy. Oh, says it's a stock market rule to clear the funds. So I sold too late. Yeah, I believe so. Yeah, if you go to TradingView, let's see. I think if you go to trade, it's still, I remember it said there's like a little countdown. Let's go to what's new. Yeah, here, Black Friday. Yeah, just go to your profile, click onto your profile picture, and go to what's new. And you can see right here, there you go. Yep. Grab a discount. There you go. 16 hours left, Hitch. You got 16 hours to get that 70% off and 1 month free. Now, if you do that, definitely use my link. Let me put the good old link in there for you. If you want to get that Black Friday sale, tell them Chris Giuliano sent you. Let me go over. Let's see. Right here. Let's go over here. Let me bring it up for you. Let's go to the website. Let's go to the good old home page here. There you go. See this, Hitch? Trading View right there. Click on to Trading View. There you go. There you go. That is Black Friday sale. Yep, it is still up there. So yeah, just use that link. Just use that link on the website there to get that offer. And then just go through that website there, and they'll say, "Oh, thanks, Chris. Thank you, sir." They don't even pay me for that. I think they just mark it as I sent you there or something, and then it helps me become better friends with them or something like that. I know there was a link. Affiliate. Hey, look at that guy. Books. I know I have it here as well. Visit website. Yeah, if you go through any one of these links here, yeah, that's the one. Share the love. I love that. Look at that. Trading View. Share your love. Chris Giuliano. Here you go. I'll put that right in here. There you go, dude. There you go, everybody. Use that link. Use that link. Get 70% off and 1 month free. Dun, dun, dun. Alrighty. Alrighty then. Anything you guys want me to look at? Otherwise, I'll probably cut it short here. Not much going on, but we followed some price action today. Yeah, kudos points. Yeah, something like that. I referred a bunch of people, and they said they gave me 2 thumbs up, and they said, "Hey man, thanks." I didn't receive any check in the mail though, but no checks. Just hey, thanks, buddy. Hey, that's cool. It's all good, man. It's all good. Let's see. Any stocks? Should we look at any stocks, Hitch? Anything of interest that we should take a look at? Stocks. CRISPR. How's CRISPR doing? Where is it? Oh, look at that. That's from our last encounter. Wow, look at that. Look at on CRISPR here. 4-hour chart. 4-hour chart. This is what we were drawing here. here's where we drew the line, right? So we were looking at it like this at the time. We were looking at it like this at the time. And I said, you know, it's going to do something like this, right? Possibly. Possibly going to do something like this. And there you go. Wow, that was pretty accurate. See, if you could draw this stuff out and have a guide, you're in much better shape than the next guy. You're in way better shape than the next guy if you can draw this out like this, and just have a guide telling you, hey, what's going to do? What's this thing going to do? And the settings that we have on TrendCloud seem to really be working well for these NASDAQ stocks. I mean, look at this. Break to the downside, right? Right here. Break to the downside, broke through structure, came up, previous resistance or previous support becomes resistance. And there you go, right there. Get a signal down, pulls back, kind of hits the cloud, goes down, kind of bounces around, deep pullback inside of a downtrend. And we got another move down right here. Signals to go short. Here's your crossover. Pulls back into the cloud, down. Right? Break below, pulls back into the cloud, down. Pulls back into the cloud, down. Pulls back into the cloud, down. Breaks through structure deep, pulls back into this here consolidation, right? Bull trap. Starts the count again. 1, 2. Recalculates. 1, 2, 3, 4. Pulls back into the cloud. 4. Down 5. Trend is extended. What does it do? Breaks back above and starts going sideways here. Right? Until we break back down again. Sold 66% to preserve some profit. Nice, Hitch. Good run event. Yeah, excellent. Yeah, so I mean, look, man, this is a great technique for buying, right? This is a great technique for buying and accumulating this asset, right? Look at if you just take it right here, like, oh wow, CRISPR's going down, right? CRISPR's been going down, but I like this company. I want to buy this company, right? I don't want to sell this company. I want to buy this company. So let's see what happens here. Man, CRISPR's going down. I know the company's not going. I know this isn't going out of business. Oh, look at this fourth wave. I know this isn't going out of business. This is a buying opportunity here. Fourth wave. Are we going to become extended? Wow, look at that right here. Right here. We're extended. We're extended. I could start aggressively buying CRISPR as it starts to break back above those blue candles, right? Move it forward. Right there. Start buying. Move it forward. Right? If that's all you do, that's what happens when you buy and acquire companies that you believe in. Wait for those extended trends to the downside. Wait for those downward extended trends and start buying this. That's how you accumulate stocks that you believe in. Gene editing will change. Oh boy, yeah, it sure will. Health industry, health, maybe health investing too. Heard on the street. Oh, on the street. Yeah, the street. Yeah, good. Motley Fool is pretty good. What's the other one? Alpha. Alpha's good. Motley Fool, Alpha, The Street. Yeah, good stuff, man. Yeah, really, really good stuff. So, all right, guys. Well, hey, hope you guys had a great holiday. Lot of great stuff coming up. A lot of great videos are being made. I'm editing a lot of fantastic trading videos for you guys. That will all be posted. Wall Street Journal. I used to love holding the Wall Street Journal paper. Did you ever do that, Hitch? Did you ever just grab just like I loved holding the actual paper in my hand, sitting at a coffee shop or something. And there was just or at the morning breakfast table, there was just something, even the smell of it. Remember the smell of like the newspaper? That's so nostalgic to me. I still enjoy that. But with technology and our faces are always in front of the screen. It's just kind of easier to uh, to have and you get more you get more out of it, don't you? You get more out of it when you are actually you've got video and you've got the blogs. It's much more interactive. But there's just always something so way before my time. Finviz mixed. Yeah. Yeah, man. Yeah. Oh boy. Well, I mean, they still sell the paper. If ever you travel, or you go to New York or something, pick up the paper, Hitch. Pick up the paper, go to a coffee shop and just like smell the paper. People will think you're weird, but in New York, and no one will notice. Weirdness is everywhere. So, but yeah, there's such something about holding a newspaper. It's really something. It's really something. So, well, all right, guys. All right, guys. Well, yeah, get in on that Black Friday deal for TradingView. If you want to pick up TrendCloud, by all means, I'd be happy to have you. And that is it, guys. I will see you all on Monday. Thanks, everyone. Take care, guys.